Welcome back to Smart Stock Sam. And before we even get into today's breakdown, I want to say this out loud. The call was right. We predicted the bottom, we marked the buy zone, and the market delivered exactly what we mapped out. If you were watching last week's video and you took action, you already know what I'm about to show you. And if you missed it, don't worry, because today we're going even deeper. We're talking about whether supermicrocomputer, ticker SMCI, is setting up for a full-scale rebound fueled by insider buying, institutional accumulation, and an options market that looks ready to ignite. We've got price targets, technical levels, and a hidden signal in the options chain that most traders aren't even looking at. Stay locked in, this one gets good fast. Last week, we called a precision entry at $29 even, and the market rewarded that patience with a rally to nearly $33. This was not luck. This was a fundamental spark colliding with a technical breakout. We saw record AI revenue of $12.68 billion slam into massive institutional accumulation, and the stock responded exactly the way our roadmap said it would. But here's the real question, burning in the back of every trader's mind right now. Is this just a dead cat bounce? Or are we clearing the launch pad for a $41 price target? To answer that, we need to look at exactly how the prediction met reality on the chart. Take a look at the action from February 17th through the 20th. We called the start of the week choppy and bearish. And sure enough, SMCI hit an intraday low of $29.35 on Wednesday. That was the buy zone. Then Thursday happened. Volume poured in, an 8.25% surge in a single session. We are now testing the aggressive entry ceiling at $33.50. And here's where it gets interesting. If we break that ceiling, do you think the shorts are just going to sit there and let it happen? Not a chance. But what's actually fueling this move under the surface? This entire setup was a collision of two worlds. On the fundamental side, SMCI didn't just beat expectations. They raised their full-year revenue guidance to a staggering $40 billion. $40 billion. That's not a company struggling to stay relevant in the AI space. That is a company seeing demand it can barely keep up with. On the technical side, you have roughly 18 to 20% of the entire float sitting short. Think about what that means. You have record demand from one direction and a massive crowd of people betting against the stock from the other. That is a powder keg environment. One spark and the whole thing blows. But before you go all in, we have to address the risks that could derail this entire thesis. Let's be objective here, because that's what Smart Stock Sam is all about. SMCI is a speculative buy. It is not a set-it-and-forget-it stock. On one side of the scale, you have enormous reward potential as a pure-play AI infrastructure leader. On the other side, you have a very real margin problem. Gross margins have collapsed from nearly 12% down to roughly 6.4%. The company is stuck in a volume game, squeezed between NVIDIA as a dominant supplier and hyperscale customers who have serious pricing power. And if that isn't enough, a single customer accounts for 63% of total revenue. If that relationship changes, the floor drops fast. So with that picture on the table, why are some of the smartest institutions in the world aggressively loading up? While retail traders are arguing on social media, the institutions are buying. Recent filings show the Canada Pension Plan Investment Board increased its position by a mind-blowing 344%. Bank of America added over 150% to their holdings. Mirai Asset Global tacked on another 26%. These are not meme stock traders chasing momentum. These are some of the largest, most sophisticated capital allocators on Earth, adding exposure at these exact price levels. And here's what makes it even more compelling. It's not just the outsiders. In early February, CEO Charles Liang and CFO David Weigand bought shares at an average price of $33.33 out of their own pockets. When the people running the company deploy personal capital during a period of maximum uncertainty, that signal is loud and clear. They believe this stock is undervalued. They are literally buying the dip right alongside us. So where does Wall Street think this all leads? The analyst consensus has shifted to a moderate buy, with an average price target range between $41.31 and $43 even. From current trading levels, that implies roughly 35% upside. The street is starting to see what we've been watching all along. Revenue growth is beginning to outpace the margin concerns. But how do we actually trade this next week without walking into a bull trap? Before I share my analysis on trading setup, I want to make something very clear. Nothing in this video is financial advice. I am not a licensed financial advisor. Everything discussed here is for educational and entertainment purposes only. All investing involves risk, and you can lose money. Always do your own research and consult with a qualified financial professional before making any investment decisions. Past performance of any trade setup or prediction does not guarantee future results. Trade only what you can afford to lose. All right, here is my analysis on trading setup for the week of February 23rd through the 27th. Support sits at $31.50 at the 20-day moving average, with a major psychological floor at $30 even. On the upside, the first major hurdle is $33.50. That's the battleground level. Beyond that, the R2 resistance sits at $36.05. If we hold within this range, it's a trader's market. If we break out, it becomes a momentum play that could move very fast. I'm watching two entries. Entry A is the momentum play. Buy the breakout above $33.50 on high volume confirmation. Entry B is the value play. Look for a bounce off the $31.50 support. But the most important part of either trade, a hard stop loss at $27.60. That is the 52-week low. If we break below that level, the thesis is broken and you protect your capital to fight another day. Now, if we do get the breakout, how high can this actually go? The climb to $41 is not going to happen in a straight line, but it is a logical path. First, we need to clear the Fibonacci resistance at $32.90. Once that's behind us, the short-term target becomes $36.05. If momentum holds and the market continues rewarding the guidance raise, the path to the analyst consensus near $41.31 opens up. But what if there's a catalyst that could compress that entire timeline into a single week? Here is what most traders are missing right now. There are 91.8 million shares currently short. That is an enormous amount of forced buying waiting to happen if this price continues to climb. And when you layer in the whale activity in the options chain, massive open interest sitting in the $33.50 calls and the $36 calls expiring February 27th, that tells you something very specific. Big players are not just expecting a move, they are positioned for explosive volatility. If the stock pushes through those strike prices, it triggers a gamma squeeze that forces short sellers to cover, which pushes the price higher, which forces more covering. Could we see a squeeze that blows straight past our targets before most people even realize what's happening? Now, putting it all together, if SMCI holds above $32, the path to $40 is wide open. The technicals are backed by institutional smart money, insider buying from the CEO himself, and an options market coiling up for a potential breakout. We have the demand, we have the guidance raise, and we have a short interest that could turn into rocket fuel. This remains a high-stakes, speculative play. But for those who understand the risk and manage it with discipline, the reward potential here is hard to ignore. I'll be watching that $33.50 level like a hawk on Monday morning. If we break it on volume, you'll want to be ready. If this breakdown gave you an edge today, do me a favor. Drop a comment below and tell me, are you watching that breakout level or waiting for a dip to support? The conversation in the comments is always where the real insight lives. And if you haven't already, hit that like button and subscribe to Smart Stock Sam, because we drop these roadmaps every single week, and the next setup might be the one that changes everything for your portfolio. See you in the next one.